Mr. Yola, thank you. Yes, Prince, thank you. Mr. Yola, good evening. Hello. If you're in Nigeria, good evening. And thank you, all of you. Okay, we have about 47 persons, 48 persons. Let's get more feedback, then we can continue. All right, I hope you all can see my screen. If you can see my screen, type yes. If you can see my screen, type yes, and then we can proceed. Okay. Mr. John Okoli is asking, how do I send a message? You just sent one. Idris, you can see my screen, right? Yeah. Mr. Yola Olatunji, yes, yeah, okay. Ebuka says they can see my screen. All right, so I will proceed with the class right away. My name is Godson Osago, FX trainer with Forex Time, and I'll be your presenter tonight. Thank you very much for tuning in. And if you do have any questions, kindly type it in. Between intervals, I will give attention to one or two questions when they have been dropped in. All right. If you can hear me clearly, just type yes. Someone is saying he can hear me clearly. Let's know whether it's from my end or from his end. All right, everyone can hear me. Everyone can hear me. Everyone can hear me very clearly. So check on your connections for better response. Mr. Fideli says he cannot see my screen. I think others can. So please try and get a good network and we'll proceed. All right. All right then, so we are up and going. We shall be considering the Crab Harmonic trading strategy. The Crab Harmonic trading strategy. And today we'll be looking at a few things in our agenda. We will consider tops and bottoms. And then we shall also consider the Japanese candlesticks. Then we'll go on to look at the Fibonacci extensions. And then we'll consider an indicator called the MACD, MACD. We shall look at positive divergence, negative divergence, bullish crab harmonic pattern, the bullish crab harmonic pattern, the bearish crab harmonic pattern, and the bullish reversal strategy, which is called the crab. The bullish reversal strategy, the bearish reversal strategy of the crab, and then we'll take question and answer. So I suppose in the next 1 hour or so, we should be rounding off with our webinar for today. All right, so uptrend. What is an uptrend? An uptrend is defined by successive higher tops and higher bottoms. That is to say, we have a high here and a bottom, top and bottom, and then that's it. We have tops and bottoms in this manner. Might not exactly look like this, but the point is, it is creating higher tops. The current high, the current top is higher than the previous top, and the current bottom is higher than the previous bottom. When this happens, we say we are in an uptrend. Successive means it has to be 2 or more. So I should have 2 or more tops and or 2 or more bottoms. increasing in that manner. Increasing in that manner. The tops are rising and the bottoms are also rising. The tops are rising and the bottoms are also rising. Okay, so we move over to the bottoms, the downtrend. Therefore, a downtrend is defined by successive lower tops and lower bottoms. Successive lower tops and lower bottoms. How? Let's take a look. We have it this way. As you can see, we have our tops lowering and we have our bottoms also lowering. Like I said, for you to have a downtrend, it must be a minimum of 2 lower tops and 2 lower bottoms. Then you can say that a downtrend is established when the second lower bottom is broken downwards. When price breaks the second lower bottom downwards, then you say a downtrend is established. What we need is a minimum of 2 lowering tops and a minimum of 2 lowering bottoms. Okay, all right. Then we look at the Japanese candlesticks. Back in time, in the 17th century, when the Japanese, as rice farmers, went on to, in a bid to keep price data of their rice, created the Japanese candlestick. So its origin is from Japan. And today we use it in trading because it shows us a more graphical representation of price. It shows us a more graphical representation of price. So this is what we have. The green candle representing my bullish candle and the red representing my bearish candle. My bullish candle, I mean price opening below and closing at the top. And then while the other one, the bearish candle, is identified by price opening at the top and closing at the bottom, as we can see in the image shown. So price opens below and closes above. That's a bullish candle with a high and a low. And price opens above and closes below with a high and a low. That will be a bearish candle. We have the upper shadows and the lower shadows. The upper shadow is from high to close, while the lower shadow is from open to low for a bearish candle, and the other way for a bullish candle, and the other way for the bearish candle. The real body of the candle is the open of price to the closing of price. That makes the real body. The open of price to the close of price makes up the real body. While from low to high, comprising of every part of price, every part of the candle, the low, the close, the body, the open, and the high. The low, the open, the close, and the high, including the body, all make up the range. All make up the range. Okay. Very quickly, we'll consider the reversal candlestick. The reversal candlestick. In this strategy, we'll be employing some form of price action to help us find entries in the market. And that is why we'll be looking at the reversal candlestick. Whenever we see this candle pattern at an appropriate location in our analysis, we see that as an opportunity to find our entry point, our stop loss, and our take profit. We'll get to that very soon. So the reversal candlestick, there are two of them, the bullish pattern and the bearish pattern. The bullish pattern and the bearish pattern. So the bullish pattern, that is it, circled. We have one circle at the bottom and we have the other circle just slightly above it. The bullish pattern particularly is a 2-candle pattern where the second candle closes above the opening of the first. The second candle closes above the opening of the first. As you can see in the circles, the second candle is a bullish candle, and the body of that candle is greater than the body of the previous bearish candle. So first, I need to have a bearish candle, and then secondly, I would have a bullish candle with a body greater than the body of the previous bearish candle. And it should be closing above it. So the second candle closes above the opening of the first. And then lastly, we say the shadows are irrelevant. The shadows are irrelevant. So in this case, I'm not going to really consider the shadows of the bullish pattern. All right, we look at the bearish candles. The bearish reversal candlestick, or the bearish pattern, that is a circle up there. Circle up there. In this case, it's also a 2-candle reversal pattern where the previous candle is a bullish candle, but the current candle will be a bearish candle. The second candle will be a bearish candle. And this time around, the body of the bearish candle will completely engulf the body of the previous bullish candle, but this time around downwards. It will engulf it downwards. So the second candle closes below the opening of the first. The second candle closes below. Remember, this second candle is a bearish candle, and the previous candle is a bullish candle. So it's going to close below the opening of the first. And then we say the shadows are also irrelevant. The shadows are also irrelevant. All right. Before we go to the next slide, if you're following, just quickly type in yes. You're following, just type yes, so that I know that you are with me. You can hear me clearly, you're following the class, and then just type in yes. All right, thank you. Thank you, Idris. Thank you, David Aka, Mr. Obot, Mr. Patrick, Abim Bola, Augustine, Nicholas, Sarah, Prince Will, Fidelis. Yeah, thank you, thank you, thank you. All right, so we will just continue very quickly. Mr. Adebayo Chukudi, thank you guys, thank you so much. Then you're following. Okay, all right, so we'll move on to the next slide. The Fibonacci ratios. What is Fibonacci ratios? We'll just give a brief summary of the Fibonacci. The Fibonacci was an Italian mathematician who did an experiment, worked on a research, and came up with some fantastic numbers. And then those numbers play a lot in mathematics, physics, and also we know that price is number. Price is number. So we see it also play out very strongly in price, and therefore we want to consider it. We are considering it. All right, so he came up with very fantastic numbers, like I said earlier, and then these are the numbers he was working on. 1 + 1 giving you 2, 1 + 2 to give you 3, 2 to 3 to give you 5, 5 + 3 plus 3 + 5 to give you 8, 8 plus 5 + 8 to give us 13. So if you look at these numbers, it was adding successive numbers, If you add successive numbers, it will give you the next. So if I add 21 and 34, it will give me 55. If I add 34 and 55, it will give me 89. If I add 55 and 89, it will give me 144, and so on and so forth. And then he now went on to do out a division. Now he divided successive numbers backward. Divided successive numbers backward. And in doing that division, 89 divided by 144, we have 0.618. 144 divided by 233, it will give you 0.618. 377 divided by 233, it will give you 0.618. 610 divided by 377 will give you 0.618. Oh, that's amazing. That's a great number then. So then he went on again to divide this time around alternate numbers. Alternate numbers. Now, in dividing alternate numbers, it means I'm going to skip one number and go to the previous one. So here we start 233, you will skip 144 and take 89. And it gave us 0.382. 377 divide by 144. It will give you 0.382. So if I do 1,597 divide by what this time around? So if I want to find the alternate number, 1,597, what will I divide it with? As an alternate number, can somebody tell me the answer? 610 from Obot. Thank you very much, guys. Thank you very much. Thank you, 610. David Princewell. And so what do we have when we divide it by 610? What do we have when we divide it by 610, guys? What do we have when we divide it by 610? .3. Are you sure? 0.382. Yeah, approximately 0.382. Thank you very much. Thank you very much. It shows that we are following. Yeah, how did they get the 610? Okay, Mr. Daniel, 610 is an alternate number backward from 1,597. What we're saying is that we skip the previous number and go to the one after. So if you're doing 987, you will skip 610 and divide it by 377. All right, I hope you get that clear. So it's just a sequence. Thank you very much. All right, so came up with these two numbers. So we have 0.618 and we also have 0.382. Now 0.618 plus 0.382 will give you 1. That is a perfect number. So these are Fibonacci ratios. All right, we have Fibonacci, what we call Fibonacci extensions. It went on to do further calculations. All right, this is not a Fibonacci class, but we are just trying to have a basic understanding about the Fibonacci tool and how to use it effectively. Okay, so later on you can there's a webinar on Fibonacci taken by our professor. You can watch that webinar if you want to understand Fibonacci in details. But right now, we're just concerned on how to use the tool and use it effectively in our trading. Thank you very much. So we'll be looking at the Fibonacci extensions right away. Some key extensions are 138.2. Then we have 161.8. I want to take note of these numbers. 161.8. Then we also have 224. Then we have 261.8. Then we have 361.8, and we have 423. Now, why do we call these extensions? Because they are greater than 100. You saw the previous one we did, it was 0.618 and 0.382. Totaling, if you add both of them, it will give you 101. But this time around, these ones are greater than 1 or greater than 100%. So we have 138.2, 161.8, we have 224, we have 261.8, we have 361.8, and we have 423.6. Okay. The Fibonacci tool, otherwise called the Fibonacci retracement. How do I find it? Now, this is how you find it. You go to Insert on your chart, you go to Insert, you go to Fibonacci, and you go to Retracement. You go to Insert, and you go to Fibonacci, and then you go over to Retracement. You'll find it there. All right. While if you're using your mobile phone, if you tap on your chart, it will go to Shapes. On the Shapes, you will find the Fibonacci retracement tool right there. You find the Fibonacci retracement tool right there. Okay, so adding Fibonacci tools, adding Fibonacci levels on your chart. I'm going to give a very quick example by showing my chart. Let me see how I do that very quickly. All right, if you can see my chart, just type yes. If you can see my chart, type yes. You can see my chart. Oh, fantastic. Thank you, Zainab. Thank you, Sarah, Obot, Patrick, Idris, Adebanjo, Peter, Daniel, Moses, Chukudi, Fidelis. Good. Thank you very much. All right, so as we can see the chart, now I'm going to get the Fibonacci tool. Hold on. So I reset my Fibonacci tool. Okay. So this is my Fibonacci, or I go to Insert, and I go to Insert, and then Fibonacci. Then I select Retracement. Insert, Fibonacci, and then Retracement. So when I pick it, you see my plus, my cursor has changed. It has a plus sign with some lines under. That is the Fibonacci tool. So I click and I drag. You can see, I click and I drag. Let me do that again. I'm on Insert, Fibonacci, and Retracement. I click and I drag. Right. So with this, you can see, okay, I need to draw it somewhere where we can see everything. Okay, let me draw it here. Everything here. So this is 0, this is 23.6, 38.2, that is 0.382. 38, this is in percentage now. These are in percentages. So 0.382 is 38.2%. Then we have the 50.0, we have 61.8. 61.8 is the 0.618 converted to percentage. 0.618 is the 61.8. Then we have the 100. Then I told you of the extensions. They are greater than 100. So we have 161.8 up here, 261.8 up there, and then 423 up here. But then there are some other extensions we will be needing. Like this is the default Fibonacci too. So you need to add those extensions we just discussed in our slide. We discussed we talked about we talked about the 224 extension. We talked about the 261.8 extension. We talked about the 138.2 extension. So how do I add these things to my Fibonacci? I double click on the Fibonacci line. There's a thin line here. I double click on the line and it's highlighted. Once it's highlighted, I can right click and then Fibo properties. Under Fibo properties, there is level and there is description. There is level and there is description. There's an add button here. So I click on the add button. I want to add 138.2. 138.2 will be 1.382 under level. And then under the description, it will be 138.2. That is changing it to percentage. Okay, so if I want to add the 224, I click add again. And there I put 2.24. 2.24. And then here under description, it will be 224. That's I've converted it to percentage. Okay, we'll add one more, which is the 361.8. So under level 361.8, what is going to be the level, guys? Let me hear from you. What's going to be the level for 361.8? What's going to be the level? Here I have 361.8. So what will I have here? What will I have here? Okay, yeah, 3.618 from Cero Gechi. That's good. 3.618 David, Ebuka, Augustine, is Isaiah, Iola. Thank you very much, guys. Thank you, thank you. So here I'll add in here 3.618. Then I click OK and I OK it. You see they will appear automatically. Can you see them? This is 138.2, this is 224, and if I drag my chart down, that is 361.8. They have been added in their rightful place. They've been added in their rightful place. Thank you, Mr. Ruben. All right, please can get all you're saying on Android device. Please can you explain what Android users in mind? Okay, for Android users, that's for phone users, you have to go to shapes and then you'll be able to do the find shape. You go to shape. If you tap your chart, the circle will appear, the blue circle will appear. Then you will see shapes. It's not written as shapes, but it's just three shapes: a square, a circle, and what have you. It's just a square, a circle, and a triangle. That's shapes. You tap on shapes, you will see the Fibonacci tool. Tap on Fibonacci retracement. Just drag it on your chart. It will display the default, and then you can add what you want to add. All right, so that is about the Fibonacci tool. So if I want to draw the Fibonacci tool from this top to this bottom, that's it. From this top to this bottom, that's it. So I want to measure this retracement. So let me assume that this is a move, and I want to measure this retracement. I want to measure this retracement. So this retracement is how many percent of this move, guys? This retracement is how many percent of this move? Can somebody tell me? That retracement is how many percent of that move? This retracement. Okay. Wow, Moses Odeni says 50. That's correct. That's good. That's brilliant. Thank you very much. Now he says 50. You can see that this retracement cuts the 50 retracement line. It didn't get to 61.8. It didn't get to 100, but it was greater than 23, greater than 38, greater than 50, but it didn't get to 61.8. So we say this is a 50% retracement of this move. All right, we'll continue with that. Let's quickly go back to our slide and proceed from where we stopped earlier. Okay, so 50 Kennedy, 50 Lucky, thank you very much. Right, so another indicator we'll be using is the MACD. The indicator we'll be using for this strategy is the MACD. Like I said, I always say in my class, we are not going to trade the MACD. We're only going to use the MACD to confirm, to give more odd in what we are about to learn how to trade. So MACD, we use the default setting. So it is 12, 26, and 9. 12, 26, and 9, and that's your MACD. All right, 12, 26, and 9, MACD on default setting. Okay, we'll be looking at negative divergence right now. What is negative divergence? Or what is a divergence? We're trying to consider a divergence between price and the indicator. The indicator is supposed to be going in the same direction as price travels. While price travels, the indicator goes with it. There are two kinds of divergence. Basically, we have the regular divergence and we have the hidden divergence. But here we are concentrating our efforts to the regular divergence. So we'll just call it divergence, all right? If it's hidden, you'll see hidden in it. But this is the regular divergence. All right, so in the regular divergence, as you call it, or divergence, there is the negative divergence and there is the positive divergence. The negative divergence, therefore, will show you that price is about to fall. Negative divergence, the indicator will be lowering. The indicator will be lowering. Price is about to fall. The indicator will be lowering. Can you feel happiness? What is MACD? MACD is simply an indicator. MACD is an indicator. All right, MACD is an indicator. Okay, so the negative divergence, like I said, is a divergence where the indicator, this time around MACD, is losing value while the price is having a rise in value. And the negative divergence is often spotted in an uptrend. It's often spotted in an uptrend. It's often spotted in an uptrend. And how do we consider the negative divergence? We look at the highs of price, successive highs of price. For instance, look at this. Can you see that? Price made higher high. Price made higher high. But the indicator made lower high. Price made higher high. This is Euro AD 30 minutes. Price made higher high, but the indicator made lower high. And before long, you see price falls. Price falls and falls below. Okay, let's look at another example here. Another example here. Before price fell, look at our highs. Price was making higher highs, but the indicator was making lower highs. Price was making higher highs, but the indicator was making lower highs. Okay. Chris Ejim says, please take the definition of negative divergence again. Okay, basically, we're saying that negative divergence is a divergence of price and the indicator. This time around, the indicator is having a loss in value. it's reducing or declining in value, while price is appreciating in value. Price is going upward and the indicator is going downwards. Price is increasing in value from 10. The previous high was 10. The new high is 20. The previous high on the indicator is 10, but the new high is 5. Why price is 20, indicator 5? That is a negative divergence because the indicator is losing value, is going negative, and that will lead to a potential price fall. It will lead to a potential price fall because the price will turn and reverse in that direction of the indicator, as it were. Okay, I hope that sounds clear. I hope that is understood, Mr. I just answered your question right now. Okay, thank you very much. Thank you. Okay, so we'll move on to positive divergence. So this time around, if the negative divergence indicator was losing value, all right, and the positive divergence, you see the indicator increasing. Okay, so here, positive divergence, price wants to rise. Price was falling previously and price wants to rise. Price was falling previously and price is about to rise. So in this case, we'll be considering the lows of price because it was falling. While falling, we'll be considering the lows of price. And that is it. We can see that price was lowering, but the indicator is turning the other way. The indicator is turning the other way. Some people call this convergence, as it were, but we refer to it as positive divergence because price is about to rise. Price will go up. The value of price will rise. Potentially, there should be some other stuff to check up, all right, to have this price rising, okay? All right, so we go on to begin to check our another positive divergence, another example here. Can you see this example here? Oh, that's amazing. And then we see price rally upward. This is another positive divergence. Okay, I have a question here. Still a question. This one is asking, please sir, my network connections couldn't let me connect well. It bridges. Please sir, Christian Chuku. Oh, sorry about that. Okay. Before we move on to, I hope we get the positive divergence and the negative divergence, guys. You understood that very clearly, just type in yes. You understood the positive divergence and the negative divergence, just type in yes. Let me get your feedback. Yes, 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 yes. Oh, these are amazing people. Thank you, guys. Yes, 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 yes. All right. So very quickly, we'll move on to looking at the bullish crab. This brings us to the bullish crab. This brings us to the bullish crab. Okay. The bullish crab is identified by a cell structure, 4 structures basically, and then we buy the opposite of it. Is an extension. When you find a bullish crab, right, it potentially tells you that it's a falling market. You can see this with a lower top. You can see A is a higher top and C is a lower top. B is a lower bottom and D is a lower bottom. And this time around, we want to consider the Fibonacci ratios to help us know whether it's a crab. A bullish crab has a retracement of B as 38.2 to 61.8 of XA. I'll draw this on our chart and it will help us understand it better. But I'd like you to take a screenshot of this, or you can copy it down very quickly, and then we'll go over to the chart to practicalize what we have just seen here. While the BC is a 38.2 to 88.6 extension retracement of AB. Then the CD is an extension. You can see CD is an extension because it is greater than 100 of BC. So it's an extension of BC. We say it is 261.8 to 361.8 of BC. And then we confirm it with one more thing. It should be confirmed. We say XA is 161.8 extension of BC. So we'll get to the chart right now and then see how it goes. Have you all copied this? Do you have a screenshot of it right now? If you've copied this, or if you have taken notes, you have a screenshot of it, let me just see yes, so that we'll go to chart, because we'll be looking at it while we are doing our drawing. Thank you, Mr. Ayola. Thank you, George. Thank you, Serogechi, God's Favor, Kennedy, Chijoke, Idris, Patrick. Thank you all, guys. Okay, Udeso China, thank you. All right, so let's go quickly to our chart. Let's go quickly to our chart and see how that goes. Okay, let me look for GDAX. GDAX, this is GDAX. Oh, this is fine. GDAX H4. Yeah, I'm finding an example so we can follow. December. Okay, this is fine. All right, I'd like you to look at this structure. See the structure. Can you see the structure? So here, here is our X, point X, point X, and then we have here A, and then we have here point B, and then we have here point C, and then we have here point D. We want to understand, want to look at something. There's been a downtrend all along. There's been a downtrend all along, coming down and coming down and coming down and coming down, and then we are here right now. And then we want to know whether this downtrend is over. How do I know? How can I speculate that this downtrend is probably coming to an end? Let's see. So does this look like the crab you just drew on your chart? but we have to take the measurement. Does it look like the chart we just drew? If it looks like it, just type in yes. Let's see. So I'm looking at this, guys. Point X to A to B, and then this one, B, C, and D. That's it. So let me get your feedback. Okay, yes, Homer, Koko, Augustine, Frank, Justice, Adebanjo, Ache, Babalola, right? Yeah, thank you guys. All right, so, but next, it's not just the look. We have to do a measurement. We have to do a measurement. So I pick up the Fibonacci tool, and the first thing I'm going to start from X. I'm going to start from X, and I will draw it to A. I'll keep my Fibonacci on X, and I will draw to A to check my B. X to A to check my B. Where is B? Guys, where is B? Tell me, what's the value of B on the Fibonacci? What do you see? What do you see? What's the value of B? 61.8, Moses. That's good. 61.8, Prince Will. That's good. Good. Wow. It's 61.8. So this retracement, it breaks 23, it breaks 38.2, below 50, and then up to 61.8, but it didn't get to 100. So it is 61.8. Now, is that correct? What do you have on your drawing? In your drawing, what do you have? In the drawing, we say that B is between 38.2 to 61.8. Am I correct? Yeah. B is 38.2 to 61.8. All right. So having established point B as fulfilling one of the conditions, we'll move to the next. So this time around, we drew from X to A to get B. You're going to draw from A to B to get C. You will draw from A to B to get C. Listen up. You will draw from A to B to get your C. So I remove my Fibonacci tool because I'm going to draw again this time around. I will draw from A to B to get my C. And that's it there. So guys, tell me quickly, yeah, so what do we have as point C? Where did point C hit our Fibonacci? What point is point C on the Fibonacci? What point is point C on the 50 Kaiser, 50 Mr. Ayola, 50 Newton, 50 God's favor, yeah, 50 Idris Adonais, yeah, 50 David. Thank you guys. You are following. That is very wonderful. This is a wonderful class. Don't forget, you draw from A to B to get your C. Now, and our C, we say it's a 38.2 to 88.6, and 50 is in between 38.2 to 88.6. So that fulfills that condition as well. Condition number 2 for a crab fulfilled. Condition number 2 for a crab is what? Fulfilled. All right. So we go to number 3. We go to number 3 then. Number 3, we just finished A to B to get C. So I'm going to draw from B to C to get D. B to C to get D. I'm going to draw B to C to get D. So I pick up my Fibonacci again. I go to B, point B, and I draw to point C. And I leave it there. point C. I need you at point C. Wow, that's it. So somebody tell me point C, what do we have? Price breaks 100, 138.2, 161.8, 224, 261, but doesn't get to 361. But it's between 261 and 361. So this is a 261 as it were. It's a 261, no, 361, right? So does it fulfill the last condition? Does this fulfill the last condition? Does this fulfill the last condition, guys? I need a feedback, please. I need a feedback very quickly. Yes, someone says 361.8. Okay. Yes, yes, Mr. Ruben. Thank you, Idris. Yes, 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 yes. Yeah. So I need to compare it with what you have on your note. Compare it with what you have on your notes. Okay. So we have only 3 responses. Where are others? Are you still trying to check where we are? This is where we are. Okay. Closer to 361. Yeah. Yes. Does it fulfill it? It fulfills it because we said that it is between 261.8 to 361.8. So it can be 261.8. It can be 361.8. It can be in between both of them. Okay. So, all right. So move on. Now, with all this, it tells us that this is a crab pattern. This is a crab pattern. Wow. And that is it. But let's see something. Don't forget, this is a downtrend. In a downtrend, as we consider the lows, what kind of divergence are we looking at? Check your notes. In a downtrend, as we consider the lows, what kind of divergence are we looking at? What kind of divergence are we looking at? In a downtrend, as we consider the lows, we look at George Famous negative divergence. Is it negative, positive divergence? Kaisil Happiness, that's correct. Positive divergence, Anita and Joseph, that's very correct. Positive divergence, Mr. Ayola. Positive divergence, Mr. Ruben. Positive divergence, Ude. Positive, that's very good. Thank you, thank you, thank you. Thank you, thank you. So we are considering positive divergence. Now let's look at our point X to our point A, point D. Can you see it? And if we compare it on to the stochastic, to the indicator, which is our MACD, you'll see that the MACD is going upward while price was coming downward. Is there a divergence here, guys? Can you see the divergence here? Can you see the divergence? Yes, Silvanus, thank you very much. Yes, Mr. Kennedy, Felix, thank you, Mr. Ayola, thank you. All right, so we have a positive divergence there. And with our positive divergence, wow, see price goes up. Price goes up from this point. Price travels all the way, giving us about 1,167 pips, about 1,100 pips, guys. This is plenty, plenty, plenty. All right, potentially price travels when you spot a crab at the bottom of a trend. You check out the parameters. Might take you a little time, but just take it one at a time. From X to A to give you B, A to B to give you C, B to C to give you D. And when all conditions are fulfilled with your confirmations, one thing or the other, the MACD, the divergence, and the rest of them, potentially price could rise. All right, so we look for another example. Let's look for one more example under the, let me see. the Euro USD. Let's look at Euro USD. And look at D1 and see if we can find let's look for okay. USD card. Let's check USD card. USD card. Okay. Let's look at this, guys. Let's check this out. 1, 2, 3, and then 4, 5, and 6. All right, let's check this out very quickly and see. So this will be our point X. This will be our point X, guys. And this will be our point A. And this will be our point B. This will be our point C. And lastly, we have our point D. Okay, so we'll start our measurements. Let's see if we get a divergence. At what trend can we use this? 1 hour, 30 minutes, or a whole day? Guys, you can use it on any time frame. Any time frame. Any time frame. Okay, so I'll begin my measurement from point X. From point X to point A. Point X to point A. That is point X to point A. Did it get up to 100? What retracement do we have there? So far we have it at 61.8. Okay, so far we have it at 61.8. All right, then we measure for point A to point B. A to B to get our C. Where is C now? Somebody type in, give me the answer. What's the value for C? Very quickly. Yeah, responses are beginning to jump in. 61.8. Thank you, God's favor, Mr. Yolade Banjo, Idris, David, Ache, Kansil, Kenesil, Jide, Enitan, Humakoko. Thank you very much. 61.8 is very clear. So we move on to the next one because that condition is fulfilled. All right, from B to C to get our point D. B to C to get our point D. And what do we have there as point D? What do we have at point D, guys? What do we have at point D? B to C to get our point D. B to C to get our point D. $261.8, Mr. Ruben, 261.8. Oh, great. Yeah. Extension of 261.8. Mr. Ayola, yeah, everybody is on fire tonight. Wow, this is amazing. Oh no, somebody said, no. Kaisil, that is not 138.2, that is 261.8. This is where we are looking at currently. This is where price is right now. This is price at this level is 261.8 point D. All right, so having that, we have a bullish crab. We have a bullish crab. And then I'll just check out my filters to see. I use my filter, point X. I use my filter. All right, if you do X to A as another confirmation, you know, if you check what you drew, on your paper, on your book, X to A will give you an extension here. What extension does it give you? X to A extension. What did you write on your book? That is the second confirmation for a crab. X to A extension of D. X to A extension of D. I draw from X to A to confirm D. Yes, what do we have? 161.8, Mr. Jide, thank you. 161.8. X to A extension. Check your note. X to A extension. 161.8. Idris, Obo. Yeah, thank you very much. Thank you, thank you. All right, so that's an extension. And finally, I'll just confirm my points from this point, X to D. And then I look at it from this point, and then I have my fantastic divergence. And look at price begins to go up. It goes up. It goes very high. Very high. See how price traveled? Travels from point D up to this high. We have 1,500, 1,600 pips. 1,600 pips. That is amazing. Okay, so that is about the bullish pattern. Let's look at the bearish pattern. Let's take examples of the bearish pattern. So I'll switch to my slide very quickly, and then we'll complete it. Okay, so this is the bullish pattern, and we have examples here. This is S&P 500 as an example here. This is GDAX. We considered this example just recently at 361.8, bullish crab at 361.8. This is Euro GBP H1, Euro GBP H1. Consider this. Then the bearish crab. This is the diagram for the bearish crab. XA will confirm D at 161.8. XA will confirm D at 161.8. BC will have an extension of 261.8 to 361.8. YA, C are forming higher bottoms because it's an uptrend. When you find this in an uptrend, potentially price is about to fall, might begin to fall very soon. Price might begin to all right, so if you've taken this diagram, okay, if you've taken diagram, type yes so that we can move on. All right, okay, it's been taken. Okay, Madam Lucy, welcome. So I move on right now. This is a bearish crab, and then at point D, we start selling. So we have an example here. This is CHFJPY, 15 minutes time frame. CHFJPY, 15 minutes time frame, sometime in September. 2019, just a few moments back, September 2019. So let's go look for the CHF-JPY and see how price fared. So take a couple of examples. CHF-JPY. Where are you? Oh. I'm looking for my CHF-JPY. It's disappeared. All right, so we'll just find another example. Let's look at USD card again. USD card, July. Let me see. What about this? Okay. USD card. Euro USD. I'm looking for an example here, guys. Sorry. Okay, I have to take out this stuff. Okay, this have here. We have something here. Let's see these points. 1, 2, 3, and 1, 2, 3. All right, let's see. So this point will be our point X, and this point will be our point A, and this point will be point B. Okay, no, sorry. And this point will be C. And this point will be D. All right. So if I measure from X to A, I have B at 61.8. If I measure from A to B, this is about 88.6. Then from B to C, oops. Okay, yeah, yes, yeah. So we have it now. B to C should be going upward. That's correct. So we have from B to C, cutting almost at 361.8, cutting almost at 361.8. And there we also have, oh God, where did we go out from here? Okay, that's it. And then from there, we see price rally down, fall. Price falls from that high down to this point, 1,280 pips on euro US dollars. This is a fall in price while this XD was rising. This is XD, this is point D. While XD was rising, we had a fall in price. Let me take one more example and then I take questions. CAD JPY. CAD JPY. Then we'll go into entries. CAD JPY. Where's CAD JPY? All right, let's look for an example of CAD JPY. Okay, this is daily time frame. Any time frame, we can go to any time frame to find our opportunities. I'm looking for either top or bottom, but particularly let's find the top. This is H4. All right. Can we see an opportunity? Oh, how about this? How about this? Think this will give us another one. Yes. Let's check from this point. That's a 361.8, guys. That's a 361.8. And then this point, X to A, 61.8. $23.6, and this is a 361.8. Now we confirm with this from this low to this high. Okay, this is 131.8, just a few pips away, just a few pips away from 161.8, just a few pips away from 161.8. All right, so very quickly we'll go do our entries and then we will to complete the class. Where do we take our entries from and where do we take our exits? Where do we take our entries? How do I buy a bullish crab? How do I buy a bullish crab? If you can see my slide, just type in yes. If you can see my slide, type in yes so that we complete the class very quickly. If you can see my slide, type in yes. Thank you, Mr. Godson. Thank you, Kennedy. Thank you, Ayola. Thank you, Frank, Adebanjo, Homework, Daniel, David, Obot, Jide, Moses, Odeni. Thank you very much, Gabriel. All right, so how do I get into this market? Once I spot the opportunity to buy a bullish crab, that is the bullish crab appearing here. As you can see, I have a moving average on my chart. This is the moving average, simple moving average 14. By default, it loads on your chart whenever you install. But it's a simple moving average 14, simple moving average 14, and it applied to closing price. Simple moving average 14 applied to closing price. Okay, so once I spot this crab, the next I do is to find my entry point. But how do I enter the point? D is the potential reversal zone. That's number one. There is a positive divergence. Let me go back. D is the potential reversal zone. We are expecting a reversal at point D. The next I'll do is to find a positive divergence. As you can see on my chart, there is a positive divergence between X and D. X and D gives us a positive divergence. And the next is buy at the bullish engulfing above SMA 14. That is SMA 14 circled there, bullish engulfing. Don't forget our bullish engulfing. Bullish engulfing is a psychological candle pattern that shows you strength in the direction of what you want to do, whether you want to buy or sell. A bullish engulfing pattern will give you that psychological strength, as it were. Say, okay, market is now moving in the direction of where I want to go, so now I can buy. So the bullish engulfing above the SMA 14, the bullish engulfing must close above the SMA 14, must close above the SMA 14. My take profit one will be Fibonacci 132 extension of swing D. 132 extension of swing A to D. I'm going to show you right on the chart. Is it A to D? No, B to D. C to D, sorry. C to D, A to D, okay. And then TP2, TP3, TP3, and then lastly, your stop loss will be at point D. Lastly, your stop loss will be at point D. Okay, so the bearish engulfing, the same thing, we'll find a bearish candle, the bearish crab. Once the bearish crab appears, this is USD card H1. I'll draw my Fibonacci also. First of all, D is the potential reversal zone. D is the potential reversal zone. Then I have positive divergence. I have positive divergence. Okay, it's supposed to be negative divergence, sorry. Then I sell at the bearish engulfing. It's supposed to be negative divergence, please, not positive. This is negative divergence. Okay, so sell at bearish engulfing below the SMA 14. Sell at bearish engulfing below the SMA 14. That is the bearish engulfing circled below the SMA 14. My first take profit, my second take profit, and my third take profit. Price hits all of them. And then my stop loss is at point D. My stop loss is at point D. Okay, let's go to chart and take that practical example before I take questions. All right, so with this, what I'm saying now, we have this as established, and I want to take my trade. I take my Fibonacci and I draw from this head down to this point. So my entry point, where will my entry point be? My entry point will be the first bullish candle, bullish engulfing above the simple moving average 14. This is my simple moving average 14. And be sure, that's it, simple moving average 14. Apply to close. And I'll look for a bullish candle, bullish engulfing pattern above it. Bullish engulfing pattern above it is this one. Bullish engulfing pattern above it is this one. This is the first bullish engulfing pattern. So immediately after this formation, oops. All right. So immediately after this formation, I have this entry, and then my stop loss is somewhere here, and I begin to buy. If we take, we had an example somewhere in GDAX. We had an example somewhere here. Okay, this is GDAX, and then let's look at this. Now this is a 161. That's not a crab pattern. That's not a crab pattern. How about this? Is this a crab? Yes, this is a crab, guys. Let's see. Let's expand it a little. So I have this point, and this point. So this is a 161.8 extension of XA, and then this also is a 261 to 361 extension of XA. This is a crab. Now with this pattern, how do I now enter the market? Bearish engulfing below the linear weighted moving average. And this is my first bearish engulfing. Guys, can you see it here? This is my first bearish engulfing. This is the first bearish engulfing. So my entry point will be at the close of this bearish engulfing. My stop loss will be at point D. And then I'm going to set my target. I draw from this C to D, and that is it. So this is my take profit 1, 100. My take profit 2, 161.8, and my take profit 3, 261.8. Wow. And we see price travels and breaks all three of them. From this point of my entry down to 261.8, I have 1,000 pips. 1,000 pips. And my stop loss is 166 pips. This is a ratio of approximately 1:8. 1:7, 1:8. 1:7, 1:8. Approximately 1:7, 1:8. Let's look for a bullish example. Do we have a bullish example here? Let's see. From this point to this point and to this point. And then from this point to this point and to this point. So let's see. Here, this is 261.8. And then from here, this is 138.2, not up to 161.8. So this is not a perfect crab. This crab has only one leg. The second leg is not complete. The second leg is not complete. That you need a 161.8 from this point, and you need a 261 to 361.8 on the second leg for you to have a crab formation. You see what happens here? You see what happens here? Price gets to our TP1, gets to TP2. It didn't get to TP3 because it has only one foot. So that's not a crab. That could be something else. That could be something else, guys. So let's find a crab. Let's look at this. Here we have, I'm saying this, this, and this. And then we also see this, this, and this. Let's check our first leg, X to A. This is 161.8, completed. Let's check the second leg. This is 261.8, fantastic. Wow. Is this a perfect crab, guys? Yeah, these are my tips, David. Is this a perfect crab, guys? Let's see. I just checked the two legs. One leg, first leg, 161.8. The second leg, 261.8. Is this a perfect crab, guys? Yes, Mr. Homer Coco. Yes, Mr. Gabriel. That's very good. Thank you. Thank you. I hope others are still following. Okay, we're rounding up. Yes, David. Thank you. All right. So once this is done, we have a crab. The next thing is to take my first entry. My entry will be the bullish engulfing that closes above the moving average 14. And here we have that bullish engulfing. This is the bullish engulfing. Can you see it? Very strong bullish engulfing. So this becomes my entry point, and then point D becomes my stop loss. That's it. Point D becomes my stop loss. What next? I draw my Fibonacci from this point to my stop loss to take my take profit levels. Fib 100 is my level 1. Fib 161.8 is my level 2. And then we look for the next one. Fib 261.8 is my TP3. Wow, see, price breaks all the levels. Price goes to break all the levels. So from our entry point, we drive to 261.8. That is 1,100 pips as well. 1,100 pips in price. Don't forget, we have this coming down and we have the MACD going up. This is fantastically amazing. So you have this in place. You always wait for the bullish engulfing to form above the moving average, simple moving average 14 for you to take your entry. Once you take your entry, set your take profit levels. Either you take your take profit 1. At take profit 1, you're expected to close half of your position. At take profit 2, you're expected to close 75% of your position. That's another 25%, and then allow the other one to run to take profit 3. This will help you in profit management. Once your price hits take profit level 1, you take 50%, you close 50% of your position. At take profit level 2, you close 25% of your position and allow the remaining 25% to run to TP3. All things being equal, if we have a favorable market, then we have all these profits booked in our favor. Okay, at this point, I will bring the class to an end while I take questions for the next 3 minutes. If you have questions, you can send them in very quickly. If you have questions, send them in very quickly. And I hope you enjoyed the class. If you don't have any question, just type in class was impressive, class was nice, thank you, Godson, whatever. Let me get your feedbacks very quickly, guys. Thank you. All right, please, can you show how to draw the crab? I joined a bit late. I was having, okay, Mr. Gabriel Eze. Okay. Please, what is the MACD and SMA setting? The MACD is a default setting and the SMA is 14, simple moving average 14, apply to close. All right, class was nice. Thank you, Mr. Obo. Please can get the training video. Hopefully the training video should be up on the website anytime soon. Just keep checking up until you find it there. All right, sir, can you justify the drawings? Justify. I don't get your question, Mr. Prince Will Uchenna. Please, can you just rephrase so that I can answer you accordingly? All right, thanks, sir. But please, can we get a video on the webinar? Like I said earlier, Cyril Gechi from Omanakwe. Okay, hopefully, just keep checking on the website. You could get it very soon. Godson, you are the best. Thank you. Let's take this country to the next level. That's good. Thank you, Mr. Ruben. Thank you so much. It was fantastic. Kai Seal, happiness, Zikume. Thank you so much. Please, show me the position again for a bearish position with the word. Show me the position again for a bearish. You mean a bearish entry? Okay, I'll show you a bearish entry if I understand it clearly. That was great. Thank you, Mr. Idris. Thanks a lot. More explanation. So technical. Can we get to watch this video? Sure. Hopefully, this is awesome. Thank you. Deep insight. All right. One more time for Mr. David. This is exactly what we're saying. Let me zoom my chart. A little bit. All right, so having gotten your diagram, price should begin to change direction, but you need to confirm it because it could just go the other way. It's possible. It could continue downwards and break below the 361.8 extension and is no longer a crowd. So for you to confirm that price has actually reversed, you see candles will begin to go upward. This is a bullish crab, all right? So showing that price wants to rise, okay? So candles begin to form. This is where your 361 occurred. After your 361, you see the first candle forms, second candle forms, and breaks above the moving average. And then breaks below a little, and then forms a bearish candle here, and then a very large bullish candle. This too is a bullish pattern, bullish engulfing. So with this bullish engulfing, I know that, wow, psychologically, price is about to rise. This is price action now. Wow, this is price action now. Price is about to rise. So I take my entry at the close of the bullish candle. Don't forget, where would my stop loss be? Very important. My stop loss will be at point D. I normally tell my students and we tell our clients, if you don't know where your stop loss is, don't bother entering the market. You need your stop loss. 3 rules. Always use your stop loss. Number 2, don't forget your stop loss. Number 3, don't forget principle 1 and principle 2. All right, so now you have your entry point, quickly find your stop loss. And when you find your stop loss, do your risk analysis to know the lot size you are supposed to use, all right? Okay, and know how much potentially you are risking. Once you do that, that becomes your entry point, my stop loss. Then I draw my Fibonacci tool to help me get my take profit levels, because that is why we are in the market. My Fibonacci tools will help me get my take profit levels. I draw it from C to D, C to D. So I'm going to correct that in slides. Is C to D, all right? And once I do that, my Fibonacci 100 becomes my take profit 1, and then 161.8 take profit 2, and lastly 261.8 becomes take profit 3. All right, guys, I think we have done justice to the Crab Harmonic pattern. I want to thank you all. It's 1 hour 30 minutes. And then thank you all. It doesn't matter if the engulfing candle cuts across the SMA. Know for a buy, the engulfing candle should close above the SMA 14. While for a sell, the engulfing candle should close below the SMA 14. All right, guys. We'll draw the curtain here. I want to appreciate every one of you for your response, for your contributions, and for your answers. Thank you so much. Thank you so much, guys. See you on top of our game. Mr. Gabriel, what was your question again? Sorry, let me just check backward. Mr. Gabriel said I didn't answer his question. Okay. Say you didn't answer my question. Mr. Gabriel, I can't get your question back. I'm trying to go back to see your question. Sorry, guys. Okay, please can you show how to draw the crab? I joined a bit late. I was having okay, Mr. Gabriel, basically the crab pattern is I guess you have 1 or 2 friends in this class. They will show you their note. We're pretty out of time, but for your sake, this is our bearish crab. This is how to draw it. This is our bearish crab, and these are the dimensions. I hope you get this. Can you quickly snap this? Mr. Gabriel and any other person who didn't join the class, this is a bearish crab. So take a picture of a bearish crab. These are the dimensions of a bearish crab. These are the dimensions of a bearish crab. Lisa, show me the position again. Yeah. How can one recognize a crab once it's been formed? Okay, I guess some of you joined the class late, but then as the video comes up, probably it will help us to catch up with where we missed the class. Thank you very much, guys, and have a pleasant night rest. I am very grateful, and see you next time. All right.